And good afternoon, everyone. Welcome to the Stock Market Sage and a quick review of our good friend, Mr. Warren Buffett, and his investment in one Goldman Sachs. For those of you that don't remember, back in September, Mr. Buffett decided to invest $5 billion into Goldman Sachs at that time, looking for a cash infusion. And I had many value investor friends say, this is a great time to get in. If Warren is buying Goldman Sachs, it's time to get in on Goldman Sachs because he doesn't make mistakes. Now, Warren does make short-term mistakes. Long-term, not so much. So let's look at the deal. It's structured in two parts. The first is giving Berkshire a stream of cash and potential ownership of roughly 10% of Goldman. But it gets a perpetual preferred dividend of 10% a year. And this is pretty big. This is something you and I cannot get. So you want to be aware when you hear that Mr. Buffett is buying Goldman, he is not getting the deal that you and I can get. And as Jim Rogers famously pointed out, Goldman with 10% yield, I wish I could get that deal myself. With Warren being involved and knowing a lot about what the government bailout plan would be, he realized since the government is going to backstop Morgan Stanley, Goldman Sachs, not allowing them to fail, he basically then got a 10% treasury bond with a lot of upside potential since he was buying it at a discount, since the government is now backing Goldman Sachs, not allowing it to fail. So always remember, Warren's very sharp, but value investing in his style not only takes a lot of money, billions of dollars, but takes time. And value investing itself is generally, as I like to say, for the wealthy, due to the time element involved in value investing. So let's fast forward. Goldman Sachs 3 months later, having problems. Obviously, with the financial crisis of the end of 2008, Goldman and Morgan Stanley have taken their share of bad press and bad decisions. What is a possible expectation for future returns now that they become a bank holding stock? What do you know? About 10% seems to be the common feeling, or about $8.80 a share. So what has Goldman Sachs done since Morgan Stanley and the rest of the financial institutions have had their problems? Let's take a look. Where did Warren buy in? About September, end of September. He got a little bit of a discount on the price, right about there. And where's the stock at now? Hovering around 80. For an average investor, that's a tremendous risk to take because you aren't getting that 10% dividend. But for Warren, who has plenty of time and plenty of money, this will undoubtedly turn out to be a great investment. But beware, read the fine print. Just because the headline says Warren Buffett's buying into Goldman Sachs at a certain price doesn't mean you'd be able to get the same deal. And those consequences of that drop from 120 into 80 could be very bad for your portfolio.